We have an update on Signature Bank. It is on the market after being closed by regulators, but there's a caveat. The buyer of Signature must give up all crypto business. Now, Signature Bank's crypto clients accounted for a quarter of deposits, and the bank was reportedly under investigation by the DOJ and the SEC. Just yesterday, we chatted about this on the show. The New York Department of Financial Services rejected claims that they took over to send an anti-crypto message, and they actually said they took over because they didn't have a lot of trust in leadership. Zach, I'm going to toss this one off to you. An interesting update after yesterday's comments.
The seeds of conspiracy further sown by this update. Very crazy news out of Signature. I remain fascinated by the Signature news, and I remain fascinated of Signature as an example being sort of the opposite of what has unfolded at like First Republic Bank. So anyway, this is more fuel on that fire. Obviously, everyone in the crypto sector seems to think that banking regulators really are out to get them. That Operation Choke Point has sort of morphed into Operation Guillotine or something. And so this little nugget here that, hey, even prospective buyers of this bank who should come in are being required to cede the crypto business that had come to define Signature Bank. That is highly notable. Now, Signature Bank had other business lines, right? I think they, announced some months ago that they're trying to divest, trying to diversify in terms of their client base. Crypto represents, to my knowledge, something like a quarter of their business. So the fact that even that is too much for banking regulators to handle gives further credence to some of these suspicions that are emerging as voiced by Barney Frank and others, that this may have been motivated by something else other than the health of Signature's balance sheet. Pretty crazy. I don't know. What do you think, Will?
Yeah, I don't know. This is popping all over crypto Twitter right now, and I think that we're not really in a different place than we were yesterday, right? Like, they might come back and the regulators are saying like, hey, we didn't do this because we have an anti-crypto animus of some sort. That was sort of expected that they would say this. What does get interesting here is the fact that they said, hey, you cannot continue to operate Signet or any of these other crypto companies that you were previously banking if you're going to buy Signature. And that really just eats into the whole conversation. Does these government regulators in Washington, do they have an anti-crypto bent? And that seems to point very strongly towards it. At the same time, Zach and Jen, what you said earlier a second ago, yes, they didn't really trust the leadership at that time. And it does seem like the deposits and the solvency of the bank was quickly collapsing going into last weekend, Friday especially. And that's what we saw with SVB and a lot of these other banks, right? Like, the bank runs happened so fast. SVB lost $42 billion in deposits within something like 48 hours. Could have happened when I think the FDIC and other regulators were looking at this and being like, hey, we want to stop this from happening again. So there's an argument on both sides, but I really do think that, like, with that comment from the FDIC and other regulators that you don't want you to be banking anyone in crypto anymore, you just gave so much ammunition to everyone who's a crypto fan, and they're going to continue to attack this line of logic. Adam, I throw it up to you, though. Get your take on it.
Yeah, I mean, respect all around, but I got to say, I'm done giving the benefit of the doubt to the regulators. The regulators never warrant the benefit of the doubt. Again, like any opportunity, like they're all coincidences, but they all happen to fall in one particular direction consistently every single time something like this happens. I mean, just look at the conditions that surrounded the closure of Signature versus Silicon Valley Bank. Silicon Valley Bank was shuttered on a Friday at the end of the day, which is pretty typical for the FDIC. They go in, they recapitalize the bank, they start selling off assets. Monday morning, they open up and people have access to their capital. Now, Signature was not closed on Friday. Signature looked fine going into Friday. And there's a lawsuit that was actually just filed by some of their shareholders who are like, were you lying to us? How could you possibly have been strong on Friday and now closed today? Which is an interesting question as it relates to this. So when you're looking at this, though, there's two different things here. One is that when one of these banks tends to be closed, the bank, the regulator that closes them will put out a press release that explains the reason why it needed to be closed. That didn't happen with Signature Bank, and that is unusual. The other side of it is that when they closed it, it was actually in the same press release as they announced the banking system backstop that backstopped every single bank, which means that they announced the closure of a bank at the same time that they announced a plan that will prevent any other closures. That is wildly unusual. Why would you not just have the Signature Bank fall under the plan that you're announcing at the same time you're announcing it's closing? It's bizarre and defies belief, unless the assumption is that the point here wasn't to close a bank that actually needed closing, but was to use sort of the fog of war and all of the concerns around the banking system stability as a way to do a thing that they wanted to do anyways, but couldn't really come up with a rationale to do so. So they just did it in this way, where if you're paying attention, it looks really weird. But if you're a normal person, it's just like, oh, hey, that's another bank that failed. So again, like I do not think these people warrant the benefit of the doubt. I think we'll see that in the last story that I'm covering today as well. They're acting in bad faith in ways that don't enhance security and stability, but in fact are exacerbating many of these problems to fulfill what seem like other purposes that they've already decided are important to them. So I wish you guys the best of luck with that, but that's where I am on this one.
I think that... Okay, I want to add one more thing to this story that we haven't chatted about this week about Signature Bank. There's a class action lawsuit filed against Signature Bank claiming that the bank knew about and facilitated the FTX fraud. It claims that Signature Bank knew that there was commingling of funds. I need to caveat that it is a class action lawsuit. Anyone can file a lawsuit like this, but we haven't mentioned it on the show.